Hello traders, let me hope you guys are doing fine. Welcome to Top 256 FX. Yes, if you are new here, consider subscribing. Guys, today we are going to be talking about the gold strategy. So guys, I want you guys to understand one thing. Gold is very simple. All you guys have to understand one thing. You need to get a strategy and then you follow it all the time. So what's going to be happening right now? So what we are going to be doing, if you're on gold, first of all, don't trade gold in lower time frames like 1 minute, 2 minutes. Don't do that. Okay, so for example, here we're in upward trend. Okay, the market was going upward, so we are in a 15-minute trend. So what you're going to do, this is how you have to be trading gold, guys. Identify key levels like support and resistance. For example, we have this was acting as our resistance, and then this was acting as our support. Okay, this was acting as our support. Okay, so what you're going to do as a trader, the market was going up and then it started ranging. This is what you need to see. When you see this, what you have to do, remember we are coming from an uptrend, so the market is going to fake out like it's going up. Don't catch it. Okay, wait. Okay, first of all, if you want to trade gold well, guys, you have to understand one thing. Remember, we are on 256 FX. I'm here to help. You have to put in the action and then keep on refining a strategy. What you're going to do is this. First of all, if you go into 4 hour, okay, for example, let's see here 4 hour, we are seeing that we are going upward. Okay, the market is trending up. Okay, then what we are going to do, let's go on 1 hour. You're going to still see straight, we are still going up. So let's do this. If you go on 15 minutes chart, okay, as I've told you guys, make sure don't trade gold in its lower time frame. Gold is very confusing when you're in lower time frame. You have to trade it in a high time frame. So what's going to happen is this. If you look at this, okay, the market is trending upward. When we reached this area, we started creating consolidation. So support, identify the support, the support level and the resistance, and then what you have to do, guys, this strategy is called stop hunt strategy. So guys, I want you guys to understand one thing. The reason why gold always take people out and then eventually goes in your direction, because these institutions, they do these things intentionally to trigger people's support and to trigger people's stop losses before moving their direction. It is called liquidity grab. So what you're going to do, so if you identify, how are you going to identify the high key levels? This is one, the market has been touching here many times. So identifying key levels, it doesn't need to be perfect. Like maybe you have to touch all the points. No, you just need to make sure that you are touching the points whereby the market at least touched there as many times as possible. Okay, so what's going to happen is this. The market touched here, and then all these places. That is our resistance. So it means that the sellers don't want this market to go above. Again, if you come here down too, when the market was coming down here, here down, and then here again, the market doesn't want, the buyers don't want the market to go down. So as a trader, what are you going to do? What you have to do is one thing. This is where patience is key. What we are going to do is here. Look at this market. I want you guys to understand one thing. These institutions are here to make money. So what they are going to do, remember, everybody knows that we are in an uptrend. They fake you out like they are going up. Then the market drops, okay? Then they fake you up that they are going up again. Then the market drops. So what you have to do, be patient. What you need first before the market getting momentum, you need to first see something called liquidity grab. Liquidity grab means what? You need to see the market dropping down. Like you see this? The market went down of this last week. For example, if you identify this week, this one. Okay? Before the market starting to range, this is the last place where the market went at. Okay? So what is happening? Before the market going into its new direction or to have momentum, the market has to first get liquidity. Okay, it is called stop loss hunt. These institutions know that people who are buying from here, they know where their stop loss is. So what they do, they take the market, they drive the market to that area. So if you see this market passed this area a little bit, okay, then they pushed it inside same time. That's when we started having this move. So how are you going to do this? Let's go on 5-minute time frame. So if you go on 5-minute time frame, this is what is happening. Okay, this is what is happening in 5-minute time frame. You'll find out that this is the range that we have been talking about. The market has been touching here, and then touching. So what you're going to do, wait for the market to pass all these levels. So this is how they trap people. The market dropped, okay? After dropping, soon as it dropped, we got an engulfing candle in 5 minutes. Then it closed inside this area. This is our area of interest. So when it closed inside this area of interest, as a trader, this is what you have to do. Already we are having our influence that the market is going up. That is one. And then the second thing, we have our influence that now the market has come back for a liquidity grab. It has been grabbed and it has pushed up inside immediately. So how are you going to support these liquidity grabs? This is called stop loss hunt. The institutions know that people who entered from here, their stop losses are here down. So you have to wait for the market to first go where people's stop losses are before executing. So as soon as the market goes down, if they push it up, as soon as they push it up, what you do, execute the trade. Okay, for example, you're going to come here, then say, you know what, I'm going to execute from here. Okay, then make sure that make sure your stop loss is not so tight. Okay, after the 5 minutes candle has closed, make sure that your stop loss is not so tight. You can use for example 40 pips, yeah, something like that. Make sure that your stop loss is not so tight, and then target a risk reward of 1 to 2 or 1 to 3. So we are having another resistance here. That is 1 to 4. But 1 to 4 might be a little bit much for a lot of people. What you can do, you can target a risk reward of 1 to 3. Yes, you can target risk reward of 1 to 3. But the good thing is, why are you targeting this area? We are having another resistance here. That's why you are targeting that area. Okay? And then after you targeting a risk reward of 1 to 3, then you let the market do its thing. So guys, remember, any trade that you go into, no trader has a guaranteed win. But you spotting this kind of areas is going to give you a high quality setup. So guys, remember, as we had this range, it tried to break through. It was a fake out, okay? And then it came back. This is the reason why gold takes a lot of people out. And then it came down to pick this liquidity. So if you see this place where the market turned around, if you zoom behind, you will find out that this was the last area before the market started having consolidation. Before this move, the market last stopped here. So it means that the market, to get a move that's going to go beyond this liquidity has to be below this. So the market came and picked the liquidity here, then it had a big move. So that's the money that you saw me guys having yesterday. So this is the analysis of the trade that I made yesterday that made me that money. Okay, this is what really happened. So guys, I want you guys to understand one thing. This is what we do every single time. So this is the analysis. So what you have to do when we are in consolidation, when the market breaks out in the direction of the trend, don't catch it. Wait for it to come to pick liquidity first, and then you grab it to go with it. So this is why patience is very, very key when it comes to trading. Okay, there's a lot of strategies that I'm gonna be uploading on YouTube about gold strategies. This was stop loss hunt. You can call it a liquidity grab too. This strategy is very, very powerful. All you have to identify the key levels, and then make sure that when the market breaks out, don't catch it. Make sure that you wait for the market to first get liquidity first. Behave like a bank, okay? Behave like these institutions. Think about it. Where do you think institutions could go and pick liquidity? Where do you think people could put their stop losses? That's where you have to put your entry. So this is where people put their stop losses. So that's where the bank went and picked people, then got a big move. That's how the bank does to get always big moves from the market. So guys, this is about the strategy of gold. We are still on 256. Consider subscribing, and then at the end of the day, I'm gonna be showing you more strategies about gold.